Good afternoon, everyone. It's Pablo Zuanic, Cannabis Equity Analyst at Zuanic and Associates. Thank you for joining our webinar today, a Fireside Chat with the CEO of Tilray Brands, Irwin Simon. Irwin, welcome.
Thank you, Pablo, and nice to be here.
Thank you, of course. So look, we have a lot to cover. And for those of you that are new to our format, we take questions through email, through Zoom, the chat, through Twitter. But I ask the questions, right? That's the way we do it. So, Irwin, let's start with a recap of the August quarter that you recently reported. What do you want to highlight?
So it was our first quarter, one of our smaller quarters. From a highlight standpoint, listen, it was our biggest first quarter ever. We did $200 million in revenue, up 13%. Our gross profit, was up 35%. Our gross margin, up 500 basis points. Our beverage business was up 132%. Now, I know, comments came from investors and everybody else that your cannabis business was down. The big thing we're focused on, Pablo, is profitability here. And our gross margin was up, our gross profit was up, and what we're trying to make sure we do is sell profitable cannabis. And I think that's the important highlight to take away, from the first quarter. And, with that, our first quarter at beginning of fiscal year, there's a lot of costs that go into that first quarter where we pay up front all our insurance costs. We pay up front for other costs, and there's a lot of cash that is outlaid. So first quarter, ultimately a good start to the year. A lot of pluses, and there absolutely was some challenges in the quarter, but it was our biggest first quarter that Tilray Brands has ever had at $200 million.
Do you want to?
And by the way, we ended the quarter, with close to $250 million in cash. Our debt levels, debt to equity to about 1.75. So, strong balance sheet, good gross margins, good gross profit, good organic growth, and are up 13%. And that did not include any of the Molson's acquisition that happened in September.
Right. And as you said, and you kept the guidance for the year, right? I think 900.
And we kept the guidance for the year. I think what's important, for the company to do.
So just a quick follow-up there, two follow-ups. One, when you're talking about this focus on profitable sales growth, is that something new? Is that a pivot in strategy, or that's been the strategy all along?
Listen, I think it's not something new. It's something as, a public company today, we want to be profitable for our investors. But it's very easy for us to go out there and sell cannabis and not make any profit on it. It's very easy for us to go out there and wholesale cannabis and not make any profit on it. And we've gone through, over the last 5 years, some tremendous, price compression out there of over $200 million. And with that, ultimately, we can't really go through price compression. We're not just going to sell to wholesalers at any price. But it's not something new. There's just a real focus today on, free cash flow and profitability within Tilray. And not that there hasn't been before, but, now we see the market out there with our strains, with our new innovation, with our products out there, that we should be getting, the right prices for it and not selling it based on price. It's being sold today based on brands that we own. It's based on quality that we own. It's based on our genetics that we have. And the same with our beer. Basically, we've got some great distribution on our beer, great distribution, in regards to our Breckenridge distillery, and really good products, and our good growth in the quarter on our Manitoba harvest.
Right.
So we're getting the sales. Pablo. Yeah. You got to get those margins and dealing with the cost. And that's what ultimately gets us to cash flow positive, gets us to profitability before these non-cash charges, which I'll talk about in a little while.
Right. Yeah. And then just, obviously, we've talked about this in the past, the idea of having a diversified business model. If you were just if you had all your revenues coming from one business, maybe you would be less picky. But because of the diversified model, I assume you can be more picky in terms of seeking profitable sales growth.
So if you look at Tilray Brands today, a third of our sales and profitability comes from our Canadian, cannabis business, and A third of our profitability comes from our international business. And I'm taking our international cannabis sales, and that includes Australia, that includes our international business. And I'm taking the other third from our beverage business and our Manitoba harvest business. And, with that, that's where our profitability comes from. Each of those businesses today are profitable. Then you have our corporate expense, which as a company today, even though, on a run rate between 950 to $1 billion, there's a lot of public company costs in here. There's higher insurance, higher IT costs, there's infrastructure costs, there's people costs at corporate. That's, costs us today in the $40+ million range. So with that, scale is important. If Tilray was still the old Afria, or Tilray was a standalone cannabis company today, it would be a very challenging position. And listen, you come back and you're going to ask me later about MSOs and what it is in the US, not knowing where the US is going. What Tilray has done, one thing we know is the beer business, the spirits business, and Manitoba harvest is a legal business today. We have a real business in the US today. We're not waiting for legalization. And with that, we have businesses that generate good cash and businesses, that will ultimately grow. So just as a standalone cannabis business today, waiting for legalization, waiting for safe bank, there's a lot of unknowns out there that I would not want to be in the position. I ultimately would want to be in the position to be in the cannabis business once I know what the playbook or the outlook is for cannabis in the US. So I come back and say this here: a third of our business today comes from cannabis. A third of our business today comes from our brands in the US. The other third of our business comes from medical cannabis in Europe and our medical distribution business. And I just came back from Europe. And I got to tell you, I'm real excited about the opportunities and what the team has placed in Europe.
No, that's great. I know we have a lot to cover, and we'll move on to other subjects, but just very briefly, you talked about some challenges in the quarter. Just brief answer on that.
So, listen, I think some of the challenges in the quarter is some of the integration still that we're going through with the ABI businesses that we bought. The beer category as a category has had some challenges in getting the new products and getting new distribution out there. Some of the other challenges is this here was getting some of our new products out there in regards to our cannabis business. The other thing is Europe. We had to overcome some of the lost distribution that we've had in Europe. For instance, we didn't really sell any business in Israel. So making some of that up, and some of our other countries that we just gave up distribution. So again, it's one quarter, it's our first quarter. And if I sat here today and say there's not challenges out there, there absolutely is. Nobody's giving you anything for nothing today, Pablo. You're out there working for it, okay?
Good, that's good. Thank you for all that color there. So look, let's move on to hemp drinks, as you call them, hemp-derived Delta-9 drinks. Describe your strategy, the brands you're launching, SKUs, distribution, wholesalers you're using, the retail strategy, both in terms of online and brick and mortar stores you're reaching. Let's start with that.
Okay, so consumers today want alternative drinks. And again, it's either nutritional drinks, it's our, again, hemp-infused drinks with 5 milligrams of hemp THC, and we will go up to 10. And we think, we have the ability to sell in between 17 to 19 states. We have, our products here, which are Happy Flower products, which we come out and launch with a CBD product. We have our 420 Fizz. We have our cocktails. We have our Fizzy Jane. And we have some unique drinks. So we think, there is a great opportunity from us to launch it through our beer distributors. We also working with direct to consumer and launching it with direct to consumer. So 17 to 19 states, there's lots of discussion out there of where this can go. And I got to tell you, it's a great product with 5 milligrams, of hemp THC. We sell today 9 to 10 million cans, and that's our forecast. We don't sell it today, our forecast for the year, of THC infused drinks from Canada, okay? And you come back and we read lots of, notes out there in regards to, millennials not drinking today, but what they are drinking today is hemp infused drinks, cannabis infused drinks. They are drinking out their nutritional drinks, and we need to be in that category. And I'll talk in a little while, in regards to our non-alc drinks. We'll talk about our liquid love. We'll talk about some of our energy drinks too. And again, the other thing that's happening out there today, those that don't want to smoke, those that don't want edibles, listen, how big is the drink category? The drink category is trillions of dollars in size, okay? Yeah. So come back and think about it. What is a big category? And you think about where Tilray is situated today. We have 10 manufacturing facilities. We have 700 beer distributors out there. We're in retail in over 17,000 accounts. We're in about 7,000 accounts, at convenience stores and gas stations. We're on tap. Just think of the opportunity for us in beverage category that is tremendous. And again, not knowing where cannabis is going in the US.
Right. But let's just stay on what you call HDD9, right? Do you have an estimate right now in terms of how big is the market? There's numbers from Whitney Economics, very big numbers. There's much smaller numbers from the Brightfield Group. Where do you guys end up roughly in terms of the market size right now for what we call hemp-derived Delta-9 drinks?
Listen, there's lots of numbers out there, and until we see what states allow it and the stability in what stays out there, we don't have any forecasts, and we've not given any guidance in those numbers. I think what's important is we get the distribution. There's also, Pablo, there's got to be an education to the consumer, and we got to understand the takeaway here. So I think it's too early to tell, but just going by the Canadian numbers, okay, in one country with 38 million people and selling 9 to 10 million, cans a year, and the opportunities there, we think it's big. I come back and I make one prediction here, and this is just my prediction. And again, I'm not giving any guidance on it. If I could sell THC infused drinks legally in the US today, I think it's $1 billion opportunity if we could do that. We can't do that, of course, because I can't sell any THC products.
Right, right.
So I think it's a big opportunity. But again, I'm not going to give you any guidance. I'm not going to put any numbers out there because it's way too early and we're just starting to ship. But we're seeing some good size orders that have come in already. But what's important in this business, important in beverages, you can stack them high and watch them fly. Depletions, depletions, depletions. So that's why I'm being cautious on giving anything out there until I start seeing what the depletions are and the reorders.
And and the way we see it in terms of what we call actually cannabis, THC drinks in Canada, I think it's about 2% of the overall market. There's a lot of
I think it's a little higher,
much larger, right? But
right.
I agree. But the point is that the market could be much larger, and I think the same thing applies to the US. When I look at the headset data for cannabis drinks, THC drinks, right, sold through dispensaries, very small numbers. But then you have hemp Delta-9 drinks, right, which are sold in various states, in liquor stores. You can order online. I mean, I won't say the brand, but I've ordered 2 or 3 different brands online, and the product is literally left outside my door. I don't need to sign anything. There's no age gating. I'm not saying that will apply to Tilray. But I would say the hemp-derived Delta-9 drink market is probably much larger than what we would call the traditional THC cannabis market, in part because of, I guess, a broader distribution. So I guess a follow-up question for you.
But just on that too, let me just stack back for 1 second. We have a 45% of the market share in Canada today. Right. And with that, if you come back and look in Canada today, THC infused drinks are mostly sold within cannabis stores. Just imagine if that changes and you could go into beer stores or you could go into convenience stores and you ultimately could go into a bar and buy it on tap, how big an opportunity that is for us. So that's one of the frustrations today within our business. If we could do everything that, the consumer would want, if we weren't paying $150 million in excise tax, I didn't have a $200 million price compression. That changes a lot of the economics within Tilray today. So we're dealing with a lot of constraints that are put on us from a regulatory standpoint, from an excise tax, and where we can sell our products.
Right. But just again, staying on US hemp-derived Delta-9 drinks, which is a segment you're entering now. I mean, are you too late to the party, or is the market still very fragmented? I mean, to me, there seems to be some very well-established brands, but still maybe very fragmented, lacking distribution. You have a much stronger distribution network. How do you think about that? I won't say anything for the brands, but there are some that are well known out there. Go on.
So number one, I don't think I'm too late to the party. You know, you heard what I said before. I have 700 beer distributors. I sell 15 million cases of beer a year.
Right.
So I have manufacturing capability. Today we're outsourcing it. We're not doing ourselves. I have distributors out there, beer distributors who are clamoring for this. We know how to market beverages. We're dealing with some of the large retailers today that we sell beer to. Okay. And, you know, 420 Fizz, which is a 420 brand that we have out there, our Fizzy Jane, our Happy Flower has been out there. So we're not coming out there with new brands.
Right.
We have a sales organization and infrastructure out there. We have blitz teams that are out there pulling it. So I don't think we're too late to the party at all. And if you come back and think how we're vertically integrated compared to some of the other ones, I think we're much further ahead.
Right. No, that's great. And, you know, at some of the conferences I have attended recently on hemp-derived Delta-9 drinks, I find that I've met a lot of beer distributors that are there that are seeing a decline in their core business, and they are, you know, eager to take on some of these brands. So you guys are probably in a very good position right now, given all the distribution network that you have with the beer distributors.
Well, I would tell you this here. Every one of our beer distributors want it, even if it's not legal in their states. Of course, we can't sell it to them. It's not legal in their states.
Yeah.
But that's who most of our distribution today on the products coming out of Tilray beverages is being sold through our beer distributors.
Right. Look, and the last question on hemp-derived Delta-9 drinks, I'm sorry, how are you going to deal with age gating for the online business? Let's say in New York, it's legal, I can order online, right? But how do you control my age?
Well, again, with anything, you know, we have an online team that's checking the age and making sure they certify it. Like anything online today, anybody can do something, you know, that's not legit and whatever. And again, that is our team to make sure if we're sending to someone that's over 21 years old and that we got the right, you know, ID from them, et cetera. So that's, you know, what we're doing. We're working with third parties on that. And hopefully, you know, what we're doing is the right thing.
Yeah, no, and again, congratulations on the move. Of course, we've seen a number of other cannabis companies also entering hemp-derived Delta-9 drinks, and besides the current established brands in that segment. Just moving on to the beer strategy, just briefly remind us of the current run rate of that business, how many brands you have in the portfolio, which are national, which are regional, just a quick run through the beer business right now.
So in our beer strategy, listen, we have 19 brands today. Just go back in 2020 when we bought Sweetwater, we were doing about 2.5 million cases, you know, do about 15 million cases of beer. We have 10 manufacturing facilities. We have about 700 beer distributors out there today. And we have something that's unique, 20 brew pubs and restaurants that we're integrating into the strategy where we bring people together. We have occasions where you come with your family, with your date, with your spouse, you know, enjoy good food and enjoy our beer. And again, it's a memorable occasion. And hopefully when they have a good occasion with us, they'll be out purchasing our beer. And part of that is we're marketing our product, putting new products into those brew pubs, a lot of innovation. And we're getting good data back because we get a lot of, you know, names from Toast and, you know, we get your email address and everything to find out about your experience. And we're focused on innovation. We're focused on newness. We're focused on getting good information back what the consumers are enjoying. And that's coming from our brew pubs. Also, we're selling a lot of merchandise. It's great for people to buy our merchandise and pay for it and walk away with Sweetwater or Montauk on it. So that's a big part of our brew pubs. So what you heard me say is Sweetwater is #1 in Georgia today. You know, with our most recent acquisition in Georgia, you know, we have some great distribution there. Montauk is #1 in Metro New York. And, you know, Montauk is a fast growing product today. In regards, Tilray #1 is, craft beer in the Pacific Northwest with about an 18% share. Shock Top is our national beer, and our big part of our strategy, Pablo, is this here. We have, as I said before, 19 brands. Not every brand is national. And if we've had meetings with retailers recently, and they're saying there's way too many beer brands out there today. You got your national brands, you got your craft brands, you got your local brands. And one of the problems is a lot of our brands are sold in different states where we're selling 10, 20,000 cases. And it's irrelevant. So we're going to look at states and take our brands and focus on 3-4 states and focus on those 3-4 states. Take Montauk and Blue Point in the Northeast, and take New York, New Jersey, Connecticut, maybe Pennsylvania, and maybe some will, slide into Florida. Well over 100 million people. And having a #1 or #2 share in those markets is great instead of having this national. Montauk doesn't mean anything in Georgia. Montauk doesn't mean anything, in the Pacific Northwest. So big thing is what we're going to do is refocus brands where we think we can grow it into a $50+ million business, and refocus our major brands into those markets and cut off the tail. And where those products were being sold before, is just take them out of those marketplaces. Shock Top will be our national brand. The other interesting thing we've introduced is new products like a Runner's High. A Runner's High is not connected to any of our brands. It's a new brand. Right. It's, a non-alc brand. So again, this will be a brand that we'll take on a national basis, and it's a non-alc brand, but it's not connected to one of our 19 brands. We have a Montauk non-alc, we have a 10-barrel non-alc that will be sold in those marketplaces. So again, it's to consolidate some of our brands. It's to consolidate the states we're in, cut off the tail here, and look at selling a lot more product in 3 or 4 states instead of being spread all over the place.
Yeah, thank you. So just a couple of follow-ups there on the non-alc side of things. What are the plans for Highball? That's one of the brands you acquired. Seems to be a brand with a lot of potentially.
Highball is a brand that we look to grow, and you heard what I said before: nutritional drinks, energy drinks, non-alc drinks, and we also Liquid Love, which is a water drink that is an exciting brand for us. So there are also other brands that are non-alcoholic brands in our portfolio, and that's why we're called Tilray Brands. That's why we're a beverage company. And again, beer distributors sell energy drinks. Beer distributors are the ones out there today selling Liquid Death. Beer distributors are the one out there selling Athletica. So with that, we look to go in there and work with our distributors on the innovation and new products. So they're absolutely products that we're going to focus on.
Right. Look, just a quick answers on these questions, but one of the questions I get from investors a lot is, why are you bullish on making acquisitions in a category, beer, that seems to be in decline?
Listen, if you come back and look at the size of the beer category, and you come back and look at the size of the craft beer category, it's billions of dollars in size, okay? The craft beer business, I think, is like a $10 billion business, something like that. Beer's not going away. We're always going to drink beer. Maybe we'll drink less. And you think about it, we're only in the beer business since 2020, and we're the 5th largest craft brewer today.
Right.
So with that, I think with our innovation, with our distribution, our commitment to our distributors, there's an opportunity out there. And I think there is an opportunity to jump into other beverage categories and using that distribution, like I talked about, non-alc, our energy drinks, our water drinks, our nutritional drinks. So I got to tell you, it's a category that's a big category, but ultimately you're 100% right. If you want to be in a category that's declining and you're not going to innovate, you're not going to innovate with unique packaging out there today, with chaos packaging. You don't have a commitment from a distribution standpoint, okay? And again, the opportunity is big time, because when we're going to see retailers today, Pablo, they know the beer category is declining. They're looking for companies to come in there to help them get that category growing again. And that's what, I want Tilray to do.
No, that's great. And look, just a quick follow-up there. And you partly answered it already, but with distributors, beer distributors being either aligned with Anheuser-Busch, Molson Coors, or in the case of Constellation Brands, I think they call it the Gold Network. How do you ensure that these distributors that seem to be aligned with those three behemoths out there, how do they push your brands?
So listen, I'd come back and say this here. They're going to push the brands that pay the bills, okay? And they're a big part of the brands that pay the bills. On the other hand, some of those brands, the big guys have declined, and they're looking for smaller brands to make up the decline. And some of those big guys, and we've bought them, the craft beer businesses from them, they weren't growing, but they want them to be grown again. And no different than a Tilray, a beer distributor does not want to be dependent just on one brand today, because things happen out there, okay? And we've seen declines. Right. So I got to tell you, I've met with a lot of distributors. I've talked to a lot of distributors. They like what we're doing. And a big thing is, Pablo, is this here. The days of stacking them high and watching them fly, it's what we're doing to get the consumer engaged in our products, okay? Mm-hmm. Like, products don't walk off the shelf. The other big thing is this here. Price points have got out of control. Beer has increased tremendously in price. So how are we taking costs out today that's making beer much more affordable? We're coming out with beer with cheap fun. So what are we doing out there to disrupt the market and change the market? And that's something that's very important for us to do. So we have to earn our way. No way we're just showing up and say, oh, you're Tilray, we're taking you. No way because we're taking you because you're Montauk. No way you're taking because of Sweetwater. We have to earn that, and we have to get the customer and the consumer in there buying our products. Because you walk into a store today and you look at that cabinet with beer, right, man, it's confusing. Like, what the hell do I buy? So Tilray's got a lot of work to do to make sure that we have a good product that we're communicating to the distributor. We're at the consumer. We got a good price. We got something unique. We're just not another IPA or another amber out there, from them to enjoy.
Right. Look, I mean, before we move on, just one question on that. So can you just talk about the management team on the beverage business? Like, we've seen a little turnover at some of the other beer companies. Obviously, you have a blueprint here, and I think a very sensible strategy, but you need the right people to execute. I mean, are these people that you inherited, that you've hired? Can you just briefly talk about that big picture, if you can?
Listen, as I said before, when you go from 2 million cases to 15 million cases, you become a big business, okay? And Ty Gilmore, who is running this division for us, came from Diageo 25 years. He also he was a president of Southern Glazer Beer Division, which was a big beer distributor. And he worked for a small startup in the kombucha area. So he's come from big companies, come from distribution, and he's also, come from a startup and know what it's like to work within a smaller company. Ty understands what it takes to sell beer, to distribute beer, and get beer on the shelves. Prince Vicar, who is our CMO in that business. Prince came from Coca-Cola. 17 years, he came from Dannon. He also came from some smaller companies. So he knows what it's like to market brands. Today, he's down at Publix with the team in working with the brand and marketing the brand. And then what we've brought in is, regional managers that are 3 regional managers out there. And then we have a whole sales team out there that are out there as either merchandisers, sales team out there, and a blitz team. We also have, our head of quality that came out, our head of manufacturing that came out of ABI. We have a whole quality team out there. And again, getting to see this team firsthand a few weeks ago with our new rollout, our new marketing plans, I was quite impressed. But again, listen, we're bringing 19 brands together. We're bringing the ABI in here, brands. We're bringing now the Molson brands. We got Sweetwater 420. We have Montauk, Green Flash, Alpine, and Nelson. There's a lot we got to get done, and there's a lot we have to do here, a lot of integration. So again, back to your point, team is key here, And right now, I feel very comfortable with the team that's in place to make this happen.
Right. Let's move on now to the idea of entering the U.S. cannabis market, right? You are in the U.S. with beer and other
I'm
products.
having a non-alc beer, so I'm not drinking alcohol at 3:30 in the afternoon, Pablo. Okay.
I hear you. Nothing wrong with alcohol anyway. But in terms
Nothing
of,
wrong with alcohol.
But in the last earnings call, right? I think you made a reference to potentially partnering with a US MSO at some point. Maybe you want to give more context about that. And the angle of the question is, yes, we understand you are in the US with hemp food, with non-alc drinks, hemp-derived Delta beverages, Delta 9 beverages now, beer, but you're not in the cannabis business per se, right? Canopy has Canopy USA, SNDL has set up Sunstream USA, OGI is talking about making acquisitions, all of these via what they call a ring fence structure. How are you thinking about doing deals in the US? And in the context of other people doing deals already, how long can you wait to make deals?
So I can wait as long as it takes to do the right deal, Pablo. And it's not to do a deal. Where a lot of these companies want to do stuff in the US today because they don't have a presence in the US. We have a strong presence in the US, okay? So with that, making the deal, number one, we're one of the largest grower of cannabis in the world today with over 5 million square feet. And trust me, it's taken us 5 years to learn about growing cannabis in 1.5 million square foot facilities, okay? And we know how to grow cannabis today to get the yields with the genetics, to get the right bud, to get the potency, and that takes a lot of growing. They don't have, there's not those grow facilities in the US today. So number one, we know how to grow cannabis. We sell close to 100 million pre-rolls a year. We have 10, 15, pre-roll machines. We know how to create and process flower. We know how to do vapes. We know how to do edibles. We know how to drinks in Canada and between our European business in regards to our medical business. So everything we know in Canada and Europe, we could easily transform and bring to the US. But until we know what we can do here, we can't do it. It's a guessing game. Secondly, is this here. Again, if medical cannabis becomes legal, then we have a strong medical business today in Europe. We have a medical business in Canada. We can start selling a lot of that in the US, and hopefully with NAFTA and crossing borders and GMP, certified, we're able to go ahead and do that. With safe banking, in regards to safe banking today and ring fence, well, we do that anyway with all our US businesses from our Canadian businesses. So I think, again, depending upon what happens upon legalization, depending upon all the tax rules that change, Tilray could jump into that in many different ways. One is a startup from scratch using our assets that we have both in Canada or Europe, our assets that we have in the US today with our brands that we already have. And last but not least, we do have a balance sheet there. We could go out and buy something or buy something small and grow it. But again, today, if someone gave me a white sheet of paper, I'm not sure what's the strategy because I don't know, ultimately what's the legalization and what I'm able to do in the US today. Because, if rescheduling happens, that's one thing. If medical cannabis legalizes, that's another thing. If Safe Bank Act comes into place, that's another thing. So, hey, tell me what I can do today. The only strategy that I'm going to do today is build out a strong US businesses with adjacency to the cannabis business. And once I know what cannabis is, from a legalization rescheduling can do, I would pivot into that business upon knowing what's the right way to go. And being able to do that takes knowledge, takes brands, and takes the balance sheet to do it.
Sure. So look, the last question on that subject, and I'll use that as a segue. There's obviously many scenarios. Let's see, which candidate wins the election, what happens with rescheduling, what does it get done, how quickly. But let's take the Kamala Harris scenario. Vice President Harris, let's say she gets elected. She wants to, apparently, based on the comments she's made before, she wants to legalize cannabis, right? She wants to deschedule, which to me means doing away with the license restricted model of each state being a silo. It would mean an open market with interstate trade if she wants to deschedule. Whether she has the 60 votes in the Senate to get that done, it's a big question mark. But let's assume that that happens, that gets done in the next few years. Federal legalization of rec and interstate trade, full descheduling. How well could you participate in that market?
So again, with that, there would be lots of greenhouses for us to go by. Again, what I said, if part of that was allowing GMP product to be shipped from Canada, we have 5 million square feet of grow in Canada today. And if we could ship our products into the US, and we could take some of our beer brands today, our Manitoba Harvest brands, or some of our current cannabis brands that we have in Canada, we would have the infrastructure, the know-how to jump into that business right away. And again, the balance sheet to fund it. On the other hand, there's going to be smaller cannabis companies out there that are already multi-state operators that I think would look for a bigger partner, and either we partner with them, we buy it, or something, is ultimately to use them as our foundation to grow it out into the 50 states. We also, have something called MedMen that we still own the IP for. And do we use the MedMen brand to ultimately still, grow within the US? So there's optionality. I just hate, making decisions when I don't know what I can make a decision on.
Right. No, I got it.
But there's plenty. I will tell you, the thing is what we have the know-how to grow cannabis, and it's not easy to grow cannabis. We have the know-how with strains. We have the know-how with genetics. We have the people resources that know how to do this. And last but not least, we have the balance sheet, and we're just not going to throw good money after bad, of course. Mm-hmm. We have the balance sheet to decide which is the best way, which is the right return for our investors, and which is the right way to do it for consumers. And again, we already have, as you heard me say before, 19 brands in beer. We have our spirits brands, and we have our Manitoba Harvest. Can they translate into, cannabis brands, if that made sense? And again, Pablo, if nothing happens and no rescheduling, no legalization, we already have a good size, business in the US in the consumer products business. That's a lifestyle business that we're bringing people together, that we're going to continue to grow and do future acquisitions of.
Yeah, no, that's great. That's great, Carter. Thank you for that. Look, let's just move the discussion to international. I think we're all cognizant of the assets that you inherited when you acquired Tilray, and obviously the Afria business overseas, also very strong. But despite the German market growth in the June quarter and the September quarter, your international sales were flat. Why was that?
So again, it's repurposing, and some of the thing was it's just timing on getting it into the marketplace. I just came back from Portugal. I just came back from the UK. We had a 50% growth in Germany in the medical flower business. But we've had delays in regards to import and export permits, and led to just shifting the revenue from quarter to quarter. And Afria RX, later this past summer, just received its first commercial cannabis cultivation license, because before we were only allowed to sell it to the government. And, we have 31 approved strains. We also, in regards to getting permits to ship product from Canada, I just came back from Europe, and I spent, a lot of time in our Portugal facility. We have over 3 million square feet of grow there. We have 30 acres in Cantanhede. And again, no different. One of the big things is utilizing our Canadian know-how, utilizing our Canadian talent to help us grow cannabis in a better way. The same with Germany, with the Afria RX. Before, we could only grow cannabis for the German government. So now what we're going to do Denise Felticek and her team working with Canada on three different things. From a GMP standpoint, is buying Canada product now that we have, our Canadian grow under control. So buying product from Canada and shipping it into Europe. Number two, our Canadian grow team helping us grow cannabis in Europe, both and Portugal and both in Germany. And number three was building out the team in regards to getting to the 20 different countries. And with Germany, rescheduling happening this summer, we think we're, in a good position here. The other thing we have in Germany, which has been a bit of a hidden asset, is our CC Pharma, Tilray Pharma. And that sells today into 13,000 drugstores. And what we're looking at is how do we take the Tilray Pharma model and ultimately bring that into other countries today and utilize that to sell, our medical cannabis in other countries today. And what else can we sell through Tilray Pharma? It's a $250 million business. It contributes, a small percentage of EBITDA, but we think from an infrastructure standpoint, there's opportunities there. So if you look at our international business today, it's a $300+ million business for us. Good margins on the cannabis side. And, we need to grow our margins in regards to our distribution business. And Pablo, when my trip there last week, I'm looking big time in the spirits and alcohol business. And how do we take some of our US beer brands to Europe? Is there stuff for us to buy over there? Because I do believe one day we'll be able to sell drinks in Europe that's either hemp-infused drinks or THC-infused drinks within the European market for us.
All right. No, that's very cool. That's the first time I hear that. Interesting scoop there. Look, just a couple of quick follow-ups there. Why would you want to expand production in a free RX in Germany when you can produce at a much lower cost in Portugal?
So again, hey, I got my facility in Germany, and in the marketplace, would I build that today? No. And anybody else that goes and builds a facility in Germany, call me. I'll give you some input why you shouldn't be doing it, okay? And save you some money, and you don't have to give me any commission or fees for doing that. Mm-hmm. So number one, I have the facility. Number two, the German market wants product that's grown in Germany. Just, America wants product made in America. Mm-hmm. So I have that facility. And what we have to do, again, is taking our know-how, taking our ability, and be able to grow profitably in there. Because before I was not growing profitably, I was losing a couple $1 million a year and selling to tender through the German government. Now I don't have to do that. So that's number one. Number two is I inherited when I acquired Tilray, this facility over 3 million square feet. And back then, lighting, irrigation was different. So ultimately, that facility has always grown cannabis only at about a third of capacity. And how do I get that facility today growing at 100%? And part of it is, what people don't realize, growing cannabis in 3 million square feet with different rooms and different processing is just not something you just walk into and turn on. There's a big knowledge base that you have to learn there. And now that we have that in Canada, working with the European team, that's something we feel that we'll be able to change and grow a lot more cannabis. And again, we want to grow cannabis. We don't want to grow hay. We don't want to grow just regular flower. And the thing is, the consumer today is educated about the potency, about the quality of flower. And with them getting it for medical reasons, hey, it's got to fit for pain, anxiety, and everything. So there's a lot we're doing to change out what's happening in our international business. And again, stepping back, I feel I have a really good team today as I take the European team along with Denise and her team and using the knowledge base of Canada to really grow a strong business over there.
Yeah. One last question on international, and you've touched on it already partly. There are some companies in Germany that they pride themselves in importing from 9 or 10 different sources, right? From Portugal, Australia, Canada, Colombia, South Africa. And they claim that they have a lot of variety in their portfolio, and that the consumer and the Grünhorns or the other online pharmacies of the world want that type of variety. Do those companies have an advantage over, companies like yourself when you're more stuck on your own supply? And that's the last question on international.
No, listen, I come back and say, same thing with me. I have the ability, to get product in Canada today. I have the product to get product local in Germany, and we have the ability to get product, in Portugal. But I think, again, the consumer wants product of quality, not like grown in Canada, not like grown in other places. That's what they want today. Now, Canada is known for good product because cannabis is legal, for the last 6 years there. But there's no other country in the world today where cannabis is legal from a recreational standpoint. There's 20 different countries out there that, have cannabis legal from a medical standpoint. And Pablo, there's no other, facilities out there that have the capabilities that we have today. Okay. And the big thing too, Pablo, in growing cannabis today, there's the genetics of cannabis, there's the strains, okay? And getting the right potency and getting the right cannabinoids in regards from a medical standpoint. So that's a know-how that Tilray has. So I come back and say that, hey, I think we're well suited for that after all these years. It's taken us a long time to get Tilray Portugal right. It's taken us a long time now to get Germany right. And I think we're absolutely on the right track. The other thing is there's still a lot of cleanup. Israel was a big market. Everybody was selling product into Israel. Today, we don't sell product into Israel. So making up some of those sales there and going into other countries. And as other countries have opened up, we've gone in there and, have grown our market share. So there's, been, the market out there where we've had big sales, we lost it. We've had to go in there and, introduce new products and into those markets, something we've had to do in the European market. Now, the European market is 600 million people. So there's a big market out there. We're making a big play within the UK today, with over 60 million plus people. Germany is 80 million people. There's Poland, there's, other markets out there, Luxembourg, which is a smaller market. But we have a sales team in place today that's going to cover all of Europe.
Thank you. Look, just moving the discussion now to partnering with CPG companies, right? Especially a multinational kind out there. You saw BAT with Organigram. How do you think about that type of opportunity in the case of Tilray?
So, again, I want to partner with the right CPG company at the right time, and not just for money. It's what can they do for us? And there's discussions we've had in regards to in regards to the right medicine and the right medical company, where it provides us research development, provides us with distribution, as we partner today with medical distributors out there. As we looked at other companies, whether it's spirits companies, or we've looked at, other consumer packaged goods companies with hemp-infused foods. So I think, important there is we would partner with the right company for the right reason, the right product. And that would be research and development. That would be for distribution. It's not about just they take an investment in here for the money standpoint and we get nothing out of it. That's ultimately what I look at, is having a strategic partner.
But I guess
and I step back. I just recently presented at Impact Sales, which was a Shanken publication. And every big company that was there, I showed them where cannabis is eating into sales of spirits and beer, and what happened in Canada in regards to spirit sales versus what was cannibalizing cannabis sales. So I will tell you this here. The big companies notice what cannabis is doing to their brands and products. The big companies realize what the Gen Z and millennials are doing. So the biggest holdback on a lot of these big companies, they're afraid to jump into it until some type of legalization happens. And I think once that happens, you're going to see whether it's food, whether it's drinks, whether it's spirits, whether it's beer, those will jump into it some way, whether they buy, whether they partner, etc.
Just a quick follow-up there, and again, not to put you on the spot here, but in terms of probability, what would be a bigger probability, that you partner with a pharmaceutical company or with a consumer packaged goods company? And don't answer if
Listen, I'm not going to answer it because, again, I don't like just to throw things out there. It could be both, could be neither. I think it's just what's right for the business. And it's not about money. It's the research, it's the distribution. It's what we can deliver to, the consumer out there with either of those companies.
Okay. Look, thank you for that, Irwin. I know we're running out of time here. Just on the Canadian cannabis business, just one big picture question. We saw Aurora led market share decline for the sake of profitability. We saw Canopy Growth do the same. Is that what we should expect also with Tilray in Canada, or that's not the strategy necessarily?
Listen, market share is important, but I come back and say this here: revenue is important to us and growth. And again, headlines come out the last quarter that Tilray lessens their loss. Okay, and as I said to you, we're going to have a loss because we have depreciation, amortization, stock comp out there of about $40 million a quarter because we carry over $2 billion of assets that we're depreciating. And, these were growth facilities that we spent a lot of money on it. So I'm big into absolutely, when you're green, you're growing, when you're ripe, you're rot. So again, profitability is important and sales growth is important and managing your cost structure is important. If you came back, and as I said it before, cannabis in Canada is the highest excise tax of alcohol or anything else out there today. And it's $1 billion, tax haul for the Canadian government. If you come back and look at it, and just remember what I said before, with price compression out there over $200 million that hit Tilray, we still paid the same excise tax. So if we were paying half the excise tax and we didn't have price compression, just look how much will come to the bottom line here. So ultimately, I have the teams ultimately going after sales, taking share away, and doing that. On the other hand, we're not just going to go out there and get sales at any cost. We're not going to sell to third party at any cost. We're not going to grow product just to dump it or throw it away.
Got it. Look, the last section of the call here, let's talk about, capital allocation and your cost efficiencies. Let's start with capital allocation. I mean, in the past, there's been some criticism about acquisitions that were dilutive. Give us your perspective on that. Talk about, how will you allocate capital going forward? If you're thinking about M&A, what areas or regions are you looking at? Just touch on that first.
So again, most of my capital, if you come back and look what I paid for Sweetwater and Tilray and all that, what I try to do is accretive acquisitions, not dilutive acquisitions, okay? And again, if you come back and look at, if a FRIA would stayed as a FRIA today and just a FRIA, we wouldn't be earning, the type of adjusted EBITDA they were doing. So on the acquisition fronts, again, and there's a time that you take the cost out of it, they have been accretive acquisitions. Now there's a time you get there because of taking out some of the cost. In regards to our beer businesses today, whether it was Sweetwater, whether it was our Green Flash Alpine, whether it was Montauk, again, they were dollars and cash and stock used to buy cash generating businesses, not money losing businesses. So and again, I get, beaten up a lot that say, hey, whether it's my ATM, whether I'm issuing shares, they're dilutive. We're a 5-year-old company or a 6-year-old company. You go back and look at Tesla, it took 17 years to get profitable. You go back and, look at Amazon, how long it's taken to get profitable. It's taken us 5 years to get to close to the $1 billion of sales, generate cash, and use that cash to fund operations. So I don't like debt. And, our debt today is, a net debt to equity is about 1.4. We repaid over $300 million of convertible notes, which I'd like to pay down. We have an ATM out there today. And what I've said is that ATM, we're using the cash to do acquisitions, not for operations from a standpoint. And the big thing is this here, we got these facilities. You got to invest capital in there, whether it's irrigation, whether it's lighting, whether it's processing. So we can't just say we're not going to invest capital. And you heard what I said before in regards to price compression. You heard what I said before in excise tax. It's money that we ultimately got to do to reinvest back in these businesses.
Sure.
In Canada, you can't advertise in Canada. And you come back and say, we have over $300 million cannabis business. And today, these are brands that were built from scratch without advertising. So there has to be investment to get to where we are today.
And of course, you're investing for growth. I mean, we've seen some cannabis companies make use of depressed valuations and start share buyback programs. Is that something you would consider, or you're more focused on growth, investing for growth?
Listen, I come back and I say this here. I like to do accretive acquisitions to get bigger. On the other hand, if there's not out there buying back your stock, it's much easier integrated, and you don't have to go out there and do a lot of due diligence because on your company. So I think if there's a time that we can't do accretive acquisitions and can't do good acquisitions, there may be a time to really look back and do some big stock buybacks.
Right. Irwin, I know we're almost out of time. And for those listening in, I've tried to weave in your questions throughout the call. I'm going to ask two last questions. One, explain to the audience, based on your trajectory at Hain Celestial, your experience, those, I don't remember if it was 15 or 20 years, why should what you did at Hain Celestial be seen as proof that you can do the same or even better at Tilray Brands? How would you characterize that?
So what I did at Hain Celestial, I took a company from scratch in the natural organic food industry where no one knew of natural organic foods and didn't know what healthy eating was, and turned that into a $3.5 billion company. At its height, it was a $7 billion market cap, and did multiple rolls up. In multiple roll-up on an international business and sold in over 60 countries, okay? And as you look at the world today, wellness foods is the main thing. At that time, the big companies, the Frito-Lays, the Pepsis, the Cokes, the Kraft Heinz, the Montele's were not in natural organic food. What's different today, there's Hain and there's every other company out there today that is focused on wellness, okay? And that's probably why a smaller company has challenges. So coming back today, there's no other company out there today like Tilray that has a cannabis company, a beer company, a spirits company, and a wellness food company like hemp. So again, what I'm trying to do is educate the consumer on our products, educate the consumer on infused drinks, educate the consumer on medical cannabis. At the same time, have profitability and be a public company. So after 20 plus years of experience, hopefully I've learned a lot along the way, learned from a lot of my mistakes, and trust me, I've made mistakes and you learn from them. And with that, within Tilray, with a great team, with great brands, with the right strategy, I'm trying to do, the same thing. I've never sold a share. A big part of my compensation comes from, achieving certain numbers. Like a lot of my investors, I'm not happy with their stock price today, but we're focused on the right things for the company, and hopefully we'll see, the right end to where this should be. But again, I'm not somebody that can change regulation out there. I can't go to Washington and lobby for legalization. I can't go to Ottawa and lobby to change the excise tax. I can't go and change the price compression because there's 2,000 LPs out there. When you're dealt the hand, you got to go play with that hand, and hopefully you win with that hand. And I think what we've done with Tilray, and we get criticized a lot, we built a company that's got scale, that's diversified. We got a balance sheet. We have an excellent management team, and we have a global reach out there. And with that, I feel with that, we can get some great successes.
That's great. And look, I mean, the very last question. Sometimes there's been criticism about the cost structure, about your corporate overheads. The way you and Carl, your CFO, Carl Merton, have explained it, you manage a very lean structure, but maybe you want to expand on that.
Well, again, as a public company today, you have a board of directors, you have director liability insurance. We have insurance out there for product liability insurance. Because we're a cannabis company, we pay a lot more in insurance today. You heard me say we got facilities out there. So we have a very, very, expensive corporate structure. We have today, and I met with the IT team yesterday, 13 to 14 IT systems out there with multiple licenses out there, okay? And what we're looking to do, consolidation. We also, have out there regulatory in regards to government reporting, taxes and stuff like that. So there's a lot of costs that are in this infrastructure to be a public company, to deal with cannabis, to deal, with these different countries. And with that, you're right. And that's why I'm saying is if this becomes $1.5 billion company to a $2 billion company, a lot of the infrastructure we have in place today are fixed costs. And after costs of goods is driving, a lot of the profitability to the bottom line. But we try and run lean and mean, and whether it's Carl, myself, Denise, Blair, Ty, and the rest of the team, I'm very lucky to work with a great team and a good board of directors. We are focused on the consumer. We are focused on our investors, and I appreciate our retail investor base out there. And we're focused, in regards to when you invest in our stock, you buy our product, that you're walking away happy.
That's great. Irwin, you've been very generous with your time here. We very much appreciate all the color you've provided. If you want to make any closing remarks, but again, a big thank you. And to everyone in the audience that listen in, we try to incorporate all your questions. Those asking about double diamond, I believe the CFO has answered that before, but I would suggest you email the CFO directly. But Irwin, any closing remarks here? Thank you.
So, and Pablo, thank you very much for your time. I enjoyed this, and I like to do this almost after every quarter because I think, you don't always get all your comments out after, your earnings, and, what's written sometimes is not always, I wouldn't say accurate, is really to the point. So I appreciate you, having me on. I look forward to doing this with you again. I think it was, excellent to get our message out, and excellent for, me to be able to tell you how I feel about everything. What I will tell you is this here, it's a team that works hard. It's a team that's focused on our brands. Mm-hmm. You may not think at a time that we're not focused on, our shareholders. We're not focused on our consumers, and we get us frustrated. I've never sold a share of this company, and, I don't plan to till one day when I'm well off into the sunshine or whatever. But my point is, again, I think we're in some great categories. We got some great brands. We got some great products. And ultimately, there's going to be change out there, whether it's the cannabis world. I think we can be a disruptor in the beer business. I think we can do some great things in spirits. And I think there's tremendous opportunities internationally.
Yeah, that's great. Thank you very much, Irwin. Everyone, thank you for joining. Have a good day.
Thank you.